Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, it's at @play_finance, and if you want to join our community, finding-value.com, where I dive deeper into all these topics and subjects, looking for potential investment opportunities, sharing those opportunities with everyone in the community, answering your guys' questions. We do have a question and answer session that is occurring today, which is Sunday, 5 p.m. Mountain Time. And you can ask me whatever you'd like over Zoom call. Obviously, I can't answer personal, like I can't give you personal advice or anything like that, but I can show you what I'm doing. I can show you the setups, why I like things the way that they are, and I can show you how to do all that. Special is a coupon code that you can use if you'd like to sign up. It gives you a 50% off the first month on a monthly membership and a $100 discount on the yearly membership. And you can always switch from a monthly to a yearly if you'd like to do that for further savings. All right, we're starting with Dow Gold equals 1. He said, preceded a lost decade for stocks and an epic bull market in metals. I expect the same this time around. And this is the Dow Jones. I've compared the 1970s weekly chart to today's daily chart. The 1970s economic issues are similar to today's. We've got this double hump, double hump. That's what that arrow means. He's looking at the fractal pattern. We've got a rising wedge, and I've noticed the rising wedge on the daily updates. We have a rising wedge here from 1970 into 1973. And we had a slowdown. Is there a potential slowdown here coming? Now, what strengthens his opinions is a declining or decreasing interest rate environment. The Fed funds rate, Federal Reserve, cutting interest rates. Generally, when they cut interest rates, that's when you see weakness in the markets. And you know where you see strength? Gold. And do we see strength in gold? Yes. Well, that's pretty much in all alignment with weakness in the market, with a potential slowdown. And we see the fractals leading up to this that are very, very similar to the 1973 pullback there. Another thing that we can also look at, and we'll get that into that in a little bit, is other traits and characteristics that we can see in the fractal patterns in gold and silver and other markets as well. Another thing that I noticed here, just so you guys understand, this is the Dow Jones. This is 1966. Right here, that's 1960 or 1968. 66 is the beginning. 68 is here. So we have this double top, 66 and 68. We didn't break this high in 66 till 1982 or 3 back here. And this was a great pattern because you have a breakout of this entire sideways chop upwards in 1982. 82, like this area down here, was like the buy of a lifetime for stocks. That was like the best time. And that's when the Dow Jones to commodity ratio had bottomed for stocks. For stocks. Now we're in the exact opposite scenario where commodities are bottoming against the stock market. This is the new stock market up here peaking, just like 1973. But in 73, commodities were cheap still. This up here, stocks are expensive and commodities are cheap. So down here, commodities were actually more expensive. They were running from 70 onward and were not as cheap as they are today. So a little bit different mix with the valuations of each of these. But this is looking very eerily similar, what I'll say. This guy says, "Are you kidding me? These two articles are published minutes apart and have the complete opposite direction. One is bullish, the other is bearish. Which way is it?" Hey, it gets even worse. These two articles are written by the same journalist. And this one is a flurry of bets on Brent crude falling below 60 a barrel this year changed hands in recent days. A sign investors are hedging against the risk of another large production hike from OPEC and its allies. Same person released almost at the same time. Hedge funds boosted bullish bets on crude, the most since June amid tightness in U.S. markets and geopolitical risks, just before signs the OPEC Plus will consider another major output boost, think futures this week. Guys, I'm just going to tell you this. You cannot use the news. Reading the news is a waste of time. You're just wasting your time trying to gain information from the news. They make up narratives, they make up reasons on why something does something. They just make it up. What they are telling you isn't 100% true 100% of the time. Some of it might be true, and a lot of it will probably not be true. The reasons of the why that people seek is not what you want to seek. You don't want to seek why something sold off or why something went up, and unless it's blatantly obvious, like an earnings call and it was an earnings beat or a miss, the average day-to-day movements cannot really be explained all that well. People just make it up. They make it up, throw it out, get people to read it. That's really what it is. The day-to-day short-term market movements. Katusta says we're living through a 1970s style gold boom and nobody's noticed. Gold doesn't rally on good news. It rallies when empires crack. So gold 2025, it's the sixth best year ever. The top five all belong to the 1970s. Does that mean that we're going to see more upside in gold? I think so. I really do. I really think that we're going to see something very similar to the 70s. Now, why do I think that? Do I have to make up a narrative? Let's go to the charts. Let's go to the charts. So I've got the S&P pulled up here. I'm going to go to silver first. So this is XAG USD. That's silver priced in dollars. What I did is I took this fractal here. This whole fractal is a cycle. That's a complete cycle, that thing right there, right? What I'm going to do is I'm going to take this fractal, I'm going to overlay it on the current trade that we've got going on here. So what I'm going to do is I'm going to align the beginning of it, and then I'm going to squeeze it in, and then basically line it up to where I think we could be. There's the fractal. So the beginning of that last bull market's here. We've got the double bottom here. We've got the move up, pull back. We even have a lot of this fractal aligning quite well here. We get a big breakout, probably up to about $9,500. We chop sideways for a little bit, and then we get another big exponential move here towards the end, which could, and I don't know if this is perfect, guys, but we could go something like $600 or $700 on silver by the end of the bull market, which is a possibility, or more, or a little bit less. The way that I would say it, we go multi-$100, maybe even $1,000. I don't know if it gets all the way up there. When we get this this ending move, the ending move of the last bull market occurred in 1980. The beginning bottom was 1940. Beginning move here, if you were to take the same spot, was 2000. And 2000 was equivalent to 1940. Then the peak would go here, 2029. 2029 is the projected peak if I were to align this fractal up as best I can. So probably 2029 or 2030, somewhere in there would be my guess of when this could potentially peak out. Now, if we're going multi-hundred in silver by 2029, 2030, early 2030s, whatever it is, we have a long way to go here to the upside from where we are at today of 41-ish dollars. So yeah, this is looking fantastic. Another thing that we can do, and this was in accordance with the Great Marti in the beginning there. What I think is coming during these big commodity bull markets, um, the S&P 500 between them. So it goes up between the bull market and then the bull market, we go sideways. This is a commodities bull market here. This was the Great Marti, what we were looking at earlier. It was this move sideways there. 1982, which I have posted there, was the big move up in the S&P 500. Then we consolidated, and we had a big move up from 2013, the breakout of 2013, all the way up to wherever we peak. I don't know where the exact peak is. And I'm not sitting here trying to tell you like, oh, this is the exact peak. I don't know. But I do think this is going to go sideways and consolidate again, similarly to either the 60s, 70s or the 2000s, or a consolidation like 29 to 1950, which is a pretty long period, 20 years. Yeah, a little over 20 years. So I think that's what's coming, is a consolidation sideways perhaps in the S&P 500 at some point, and then we'll see commodities outperform. And that also aligns with the silver chart that I just showed you. It aligns with the silver chart that I just showed you. So when we get those big moves like the 70s, we're going to chop sideways, most likely like that. And that's this, and then that's this for the S&P. Julian Brigden says, constant talk of U.S. exceptionalism, together with a myopic focus on mega cap tech by the talking heads in the financial media, is blinding investors to the next big trade. As the dollar falls, these stocks underperform, and tangible assets like XME, which is the mining and metals index, massively outperform, and we just are seeing a ratio of XME versus XLF, which is the technology sector. We're just starting to break out. Oh God, guys, this looks so good. Do you know what we're looking at on the website right now? Mining and metals in a variety of different things. We've recently purchased copper companies, platinum group metal companies were, I don't know, maybe a year and a half ago. We bought a bunch of gold and silver mining companies. That's been ongoing for the past couple of years of a variety of different companies. And right now, there are some sectors that are down, iron ore, to give you an example, that I think look really, really attractive. There are companies with 7% to 12% dividend yields with massive upside leverage to the underlying commodity. And I hope some of my holdings that I have today will get repaid in dividends back to me while I hold the stock. So if I just hold the stock and the steel price or iron ore price, copper price goes up, that the dividends and payouts of those companies also go up. And I'm hoping that I will get my money back, maybe even multiple fold, in dividend payouts while I hold it. That's my hope. And we're buying right here at this breakout spot. Now, I bought a little bit before that too, whenever the bottoming pattern was in the individual company or sector. And that is where I get real aggressive, is towards the bottom, and I cost average in and get aggressive. And I'm in a variety of both speculative companies and dividend earning, big earnings companies, cash flow companies, and companies that do share buybacks at this time. Eric Yoon says, "Are you willing to hold if gold dumps from 4,000 to 3,800 Silver from $50 to $45. Miners would fall a lot more than that. Yes, I would be willing to hold. I just showed you a chart of us going multi-hundred dollars. Do you know where the big money's made? The big money is made when you identify these big trends. When you invest here, or even here, if you've got the cojones and the patience, and you ride it all the way up to the top there. This is where all the money is made. The absolute life-changing, big, 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 big money is made. It's not playing and worrying about these small market movements that occur here or this pullback there or the pullback here. Those are the small little wiggles that mess people up. The big move is where the big money is made, and this is where the big money, the big money. In commodities, in between these, so I'll just pull up US oil. We could do silver. I know a lot of people like silver. The big money is made in the big moves there. So you could have invested. I mean, really the best spot to be was 1961. Right there is the best spot. If you could go back and had 2020 vision. But if you wrote this whole thing up, if you were just a silver investor from 1940 to 1980, anywhere in there, you pretty much had a pretty smooth ride higher. And then interest rates peaked in 1980 and turned lower. And this was your consolidation, was the interest rate going down. And now we're going into a new increasing interest rate environment that's just going to light silver up. Big money's made with the big moves. So I purchased a whole bunch. 2018 was my lucky year of just loading in. I bought some more up here too, a little bit in here too, but I bought a whole bunch in there. And then platinum, I did it in 2019, 2020, and the early 2020s. I just loaded in. I'm playing the big picture moves in all of these. And there are incredible opportunities right now, incredible across the board in commodities. I mean, just incredible. So when somebody says, are you willing to ride a few $100 pullback or $5 pullback in silver? Oh God, that's nothing. That's child's play. I've already held through a whole bunch of other large pullbacks. Yeah, it's not fun. No, I don't like seeing my account down in a big amount, but nobody can time it, and they're not going to time it perfectly. So what other option do I have? Am I going to sit there and try to time it? What if I mess it up? What if I mess it up? Am I going to get back in? What am I going to go into? If I sell my silver, what am I going to go into? Am I going to go into dollars? I don't want dollars. So the only thing I would do is trade it for something else. Like let's say silver goes way up, I would trade it for gold. I would trade it for, palladium or something else. I'm not going to trade it for dollars. I don't want to go back into dollars. Yeah. North Star says every sector of the S&P 500 is in a bear market when priced in gold. We know what that means. Here's industrials. They all look much like this. So there's the port we've broken down with gold outperforming industrials. What does that mean? Well, last time we got a move like this is when commodities outperformed and precious metals outperformed. And obviously precious metals, because why the ratio is going down. This is when commodities outperform. This is when you get bullish on commodities. So then what do you do next? You look for bottoming patterns in commodity companies. Guys, if you can nail these turns, and they don't happen often, but if you can nail just a few of these turns, your life will change. You'll get hundreds of percents or thousands of percents gains or multiple thousands, and you just might be able to get one or two 10,000% increases during an 8 to 10 year period. That is life changing. I don't care what money you have in that. Turning $1,000 into $1,000,000, I'm all about it. But you know what the problem is? People aren't able to hold. They want to sell it after they're up 25, 50%, 100%, couple 100%. Everybody wants to sell. They think that they need to take their profits. The hardest thing to do, sit patiently and do nothing. When you've got the tailwinds that are all coming up like this, that's when you sit. The big money's made by sizing up the move properly and then sitting and doing nothing. And I'm going to continue to say this to all my members and everybody there: sit and do nothing. Sit and do nothing. Hey, Andy, what do you think of this? We're in a bull market. We're in a bull market. We're in a bull market. Sit and do nothing. Be patient. Let it make you money. And if you can't allow the equity and the sector to make you money, you can't make money then. At least big money. You know, big money's made by those that are deserving to have big money. They've put in the work. They know how to size it up. Everyone else is not deserving. And even if you have a mentor, it can still be difficult. The Kobayashi letter: commodities have rarely been this cheap. Commodities, excluding gold, relative to gold prices, have fallen to their lowest level since 2021. This ratio is now even lower than the bottom of the 2008 financial crisis. As gold prices have experienced one of their strongest bull markets in history, rising 109% over the past 3 years, other commodities are lagging. Historically speaking, this has led to a rebound in these other commodities. We are watching the commodity space for investment opportunities. Well, I'm not just watching, I am buying. That's what I'm doing. I am actively in there, grabbing shares from people who do not want them. And you know what I see? I see bottoming patterns. I see bottoming patterns across the board. And some of them are putting in wave 2 bottoming patterns. Others are at the bottom of the bottom. Some of these junior companies, some companies with a little bit more risk, maybe some sectors are way down. But God, some of these look so good. They get me so excited. Now, just because I'm excited doesn't mean that they will move immediately. I'm excited at the opportunity, not at it unwinding quickly. So it's about buying in at these bottoms here and getting in. So this one's not a bottom. This is another step change. We've had a consolidation. The consolidation, if you look at the fractal here, very similar. That's a 3-hump consolidation and a breakout. We have another kind of 3-hump consolidation going on here. It looks all messy. It's all scrunched up. And I think we're going to get another leg higher here. Why do I think that? Go back and look at silver. Go look at gold. Gold's breaking out and running. Tell me when commodities didn't follow gold. They almost always follow gold. So I'm going to take my chance and say they're going to follow gold again. Joseph Brown says, if everything is a bubble, maybe there's a problem with the denominator. The denominator is the US dollar. So if everything's in a bubble, everything, well, maybe that means that the thing that you are pricing it in is the problem. And they're pricing it in dollars. And that is the problem. Joseph Brown is obviously pretty smart dude. I think he understands that. That's why he's making that comment. Another one from there, I think I've already went over this one last time. So that's where we're going to end it, guys. That's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Special is the coupon code over there. If you want to get in there, get in that Zoom call for the Q&A session that we've got at 5 p.m. Mountain Time today. All right, guys. That's all I've got for today. So we'll catch you next time.